Monochrome Bitcoin ETF provides investors with a regulated pathway into the cryptocurrency market.
When you're ready to take your investments to the next level, you might want to consider Monochrome.
Hello and welcome to the Global View on this Thursday. I'm Andrew Gagan. Great to have you with us here at ausbiz. Well, the US Federal Reserve has held interest rates steady, but opened the door to begin cutting as soon as September.
The broad sense of the committee is that the economy is moving closer to the point at which it will be appropriate to reduce our policy rate. In that we will be data dependent, but not data point dependent. So it will not be a question of responding specifically to one or two data releases. The question will be whether the totality of the data, the evolving outlook, and the balance of risks are consistent with rising confidence on inflation and maintaining a solid labor market. If that test is met, a reduction in our policy rate could be on the table as soon as the next meeting in September.
So those comments were enough of a signal for markets to see risk assets rally and bond yields and the US dollar fall. The US two-year Treasury yield falling to 4.3%. And the 10-year down to 4.08%. Markets now pricing in a 100% chance that the Fed funds rate, which is currently at just over 5.3%, will be cut at the next meeting on September the 18th. Meanwhile, US labour costs increased moderately in the second quarter, with wages rising 0.9% to be up 4.2% on an annual basis. And US private sector employment rose less than expected, reflecting a further cooling in the US labour market. And the dollar added to recent losses following the Fed policy decision and Jerome Powell's comments. The Japanese yen hitting a 4-month high against the dollar after the Bank of Japan raised rates to their highest level since 2008. And the Aussie is at 65.4 US cents. Well, the prospect of the Fed easing interest rates in September sent share markets surging. Tech shares led the gains, boosting the broader market, with the Nasdaq leading the way to finish July strongly, but still almost 1% lower on the month. The S&P 500 rose more than 1% for the month, while the Dow was up almost 4.5%, and the small-cap Russell 2000 soared more than 10%. Chip stocks surged before the Fed decision, with Nvidia shares rocketing higher, helped by an optimistic 2024 sales forecast for AI chips by peer Advanced Micro Devices. Meta beat market expectations for second quarter revenue and issued a rosy sales forecast for the third quarter, on signs of strong digital ad spending on its social media platforms, which it says can cover the cost of its large investments in AI. Shares rising 4% after the bell. MasterCard beat second quarter profit expectations and said spending is holding up. Kraft Heinz slashed its organic sales forecast for 24 in the face of subdued demand for its products. GE Healthcare cut its revenue growth forecast for the year, dragged lower by sluggish demand in China. And Pinterest shares tumbled after a muted third quarter outlook, which disappointed Wall Street amid a rebound in digital ad marketing. So, much to consider. Let's get across it all. Ira Epstein joining us from Linn Associates. Ira, very good to catch up with you. So, what did you make of those comments, in particular from Jerome Powell? As I mentioned there, markets now, well, they're convinced that that rate cut is coming in September.
The answer is yes. They are convinced. As I told you, the Fed wanted more data points. You and I, Andrew, have been talking about that, and I said they probably wanted to get under their belt what I'll call 3 data points. That could be 3 months worth of weakening data. That fits in fine. We still have 2 CPI numbers to go. We've got to get, in August, we'll get the July numbers, and then in September, we'll get the August numbers for both CPI and PPI. But the tale is pretty well set. If you walked away from today's rallies and the events in the Middle East that caused oil to go up and shoot up rather dramatically today, and the metals at one point, in fact, they kept going up from that and what the Fed said, you were down. So inflation pressures haven't been picking up. They've been coming down. Grain prices in the U.S. have been falling. That means food costs here down. Meat prices have not been rising. Energy prices are down. We peaked out in gasoline right around the 4th of July, our Independence Day, and we fell back from there. So when I listened to what the Fed chair said today, it made perfect sense. It's the culmination of the data, not any one, which is a code word. You might get a number here or there that can be a little stronger, but it's the totality of the numbers, and they're pointing in the right direction, barring something that we don't see. It could be a war in the Middle East that explodes in a way we don't know right now. I would expect that September is very live. The market in the U.S. seems to want to price in 3 rate cuts, and I think they're, as usual, overly jubilant. And the reason I say that, why? It almost says that there's something wrong with the economy. I can see the Fed doing one, taking a small month pause, maybe doing another to seal it, and then if the economy keeps weakening, turning it up. But the people talking, and they've given it already like a 75% chance for a September, November, December, roughly those are the time frames. I'm not in that camp, but I am wide open to 2, and I think it's sealed at 1.
So, as I mentioned there, Ira, very much risk on as a result of what we've heard, markets pricing in that rate cut in September. What happens in September when it does cut? Is it a buy the rumour, sell the fact proposition, do you think?
You're seeing some of that already in certain markets. You know, the rotations are going back and forth in the U.S. markets. What's happening right at this minute is we're watching to see how the Microsofts and the Meta stocks are, if you will, how are they doing on spending money on CapEx? Will they keep going? As they do, and as we see like AMD yesterday show stellar earnings come out, as these chip makers find that companies find reasons to keep buying in size, they'll rotate back into the megas in front of the all-important, what date? August 30th or so, when we get NVIDIA reporting. But away from that, these traders that are all buying these low cap, the IWM or the Russell as it's referred to, I'd be very cautious. I mean, it's okay to buy the good companies in there, but just don't buy a company because it's cheap. Cheap can get a lot cheaper.
So, well, what do you do as an investor then, given that rotation is underway, Ira?
Well, I prepped you for it in our meetings here. Remember, we were at 5% on 2-year money, and I said you take a portion of your money, you put some in there. On the last time I was with you, I said gold. You want to own gold. And gold is up on a closing basis. If it were to close right now on a continuation chart, the highest close it's ever had, and we're trading around 24.91. Why gold? Because whether it's Harris or whether it's Trump, they're both inflationary creatures. They're not going to cut spending. They know one thing: we'll spend more to find a way to tax that money. Okay, that doesn't really work. And we will see the inflation numbers get scary. And sooner or later, if the U.S. doesn't bite on that, we get ourselves into a big problem. Somewhere along the line, somebody has to say in America, enough with the spending. We've got to be able to spend only if we can afford to pay for it.
Ira, how bullish are you with energy stocks at the moment, and more broadly what we're seeing in the commodity complex there? In fact, I was listening to US Secretary of State Anthony Blinken, who's still confident. He says that they're going to reach a truce, if you like, some sort of ceasefire in the Middle East. Yet, of course, you're seeing that latest news cycle where we have seen that, particularly that assassination of the Hamas leader. How would you be positioned then?
Well, it's one thing to own a vertical company. So if you're owning companies that own the well, the refinery, and they can sell their distillates and their gasoline, I like those. It's another thing if you're just a driller. And I'm talking somebody that just owns the well and you're selling your oil. Those people I don't want to own at this point. OPEC is waiting for the reason to be able to turn on the spigot and get more oil on the market. I don't think they will if the market's under, say, $78, $77. in the Brent. They could, but they'll hurt their own cause, because then they'll have more oil, and the U.S. is, of course, pumping record amounts. So the companies that are making the money, and you see that if you're looking at some of the spiders, they are showing you very clearly that the companies that are vertical are the ones you want to own, and those not vertical, I'd stay away from here. Oil today is up for one reason, not demand today. It's all about the Middle East. I don't like buying markets that go up off of fear that may not have a reason to stay that fearful. Demand is one thing. Worrying about supply that may not be impaired is a very different thing. I'll let the other guys want to own that.
And Ira, where are you seeing the US dollar track from here, do you think?
How's this? I don't know. I'm trying to get my handle on, has it made a triple top on longer term charts? Is that it? Or is the market going to find a reason to still be okay? If you were to ask me maybe next week, I'll have a better idea. We have the Bank of England tomorrow. We have a U.S. jobs report on Friday. We've seen Japan turn the corner, and I give them credit. Governor Ueda did a very nice job of both raising an interest rate and cutting their security program. So other than Japan, people want to see rates cut. And I think in the U.S., what people aren't understanding is we have a very tough policy here. If it comes down, I think that weakens the dollar. I am not convinced at all that cutting interest rates is in the benefit of the dollar. I think that will weaken it, and I think that is where I'm starting to lean. But I'm not willing to put my foot in the cement just yet. Another week.
All right, I'll come back to you next week on that. Ira, terrific to get across. So much to watch at the moment. Thanks for joining us from Linn Associates.
Thanks, Rick.
All right, let's focus on the local market before we get going. We are expecting another positive session. As you can see there, SPI futures up around 50% after that stellar rally we had yesterday. Stay with us because the open is just a couple of minutes away.